Good morning. Form 4562, Depreciation and Amortization. Part 8. Part 3. Mark or modify accelerated cost recovery systems depreciation. Section B. We'll cover section B in this session. And section B is for assets you place in service in 2020 if you are filing tax return for 2020. So you are going to depreciate those assets for the first time, for the first year. You will use Form 4562. And under modify accelerated cost recovery system, there are two systems used: GDS, General Depreciation System, and ADS. And a lot of time you will use GDS. But if you are required, your property is in the list of properties that must use ADS, alternative depreciation system, then you'll use ADS. But a lot of properties or a lot of assets, business assets, will fall under GDS, General Depreciation System. So if you place your asset in your business for the first time in 2020, you'll depreciate it in session or under section B of part 3 of Form 4562, Depreciation and Amortization. So line 19A to line 19I, you'll enter information about the assets. And A is classification of the property, B is month and year placed in service, and they have a the way they have it, that means you are not going to fill up this part for it. You are not going to put it here. And basis for depreciation, C, business and investment use only. I'll go here, that will go under C. D colon is recovery period. E colon is convention, and then F is depreciation method choose. G colon G is depreciation deduction. And line 19 A to line 19I is for general depreciation system. But then you have every single column to complete. Okay, so the publication, IRS publication 946 has the list of property class you could look to see where your property falls under. I have a summary that will be in our blog on our website, ninasoup.com, as an article to cover this session. And we have, there is 5-year property, which will include vehicles, trucks, calculators, printers, or like office equipment. And then you have appliances, furniture, carpets used in a rental real estate. And then you have 7-year property class that include office furnitures, office equipment, and any property that does not have a class life. So the 5, we have to check this one to see if calculators is here. 5-year property will include computer, and the 7-year will include office equipment. So we'll take a look at it to see. And 5-year, a lot of time peripheral, should I call it, equipment related to computers will go there, but we'll take a look at it to make sure we include them well. So 10-year property, you have fruit trees and vine, and to know the property classification life in column A. Under section B for your property, you might want to look for the class life in the publication. So we have the other columns, but first let's go deep under column line 19A, column A, and we will do that by going to the publication, how to depreciate property, publication 946, and we'll use the 2019 version. That's the most recent one out there at the moment. And let's see. The instructions will have the same, will have, believe the instruction, the information will be on page 8. And for the publication is, see here, on page 30. So 3-year property will be horses, race a horse over 2 years if placed in service before January 2009, and any age race horses if placed in service before January 1st, 2021. So 5-year property, you have vehicles, passenger vehicles. You have, qualified technological equipment. It's kind of vague. Office machinery. So we have typewriter, calculators, and copiers. So we were right putting calculators and let's see, and printers there. Let's go back. And so we do have, properties used in research and experimentation, breeding cattle, furniture used in a rental place. And let's continue. Seven-year property, you have office furniture and fixtures. So you have desk, file, safe. So not even office equipment is listed in the 7-year property. It is a 5-year property because we have technological equipment under 5 years. So office equipment related to technology will be in the 5 year, and office furnitures and light fixtures will be 7 year property. 10 year property, we have fruit trees and vine. 15 years property, yeah, so you can read that yourself. And then 20 years property has more to do with farm, and you have 25 year property class. Then residential properties and non-residential real properties. Okay, and they'll be here. So that is the classification of the properties. So, and then we cover, let's see, so column C. Let's take a look at column C. Basis for depreciation, business and investment use only. So the amount that will be here under column C, basis for depreciation, will be the basis for depreciation, assuming your asset is 100% use. If you claim section 179 deduction in part 1, you'll take that amount out of the cost or the basis of the assets. If you claim special depreciation in part 2, line 14, you'll take it out as well. And if there is any credits claimed, you'll take them out as well, and the remaining is what will be the basis for depreciation. So if it's used not 100% for business, but is used more than 50% for business, and you claim section, so that means is probably listed property, and you claim section 179 on the business use portion, so you will use the business and investment use part of the cost minus the section 179 deduction that you took to come up with the basis for depreciation. So the portion here should be the portion of the cost that is business and investment use minus any section 179 taken if qualified, and any other special depreciation that you took. You take them all out, and the remaining basis will be here. But if you didn't take any section 179 or special depreciation, and you use the asset 100% for business, then that will be the basis, will be the cost of the item. So the recovery period, let's go back here. A lot of time it will mask the class property, I believe. See if so I want to make sure I'm not in Indian reservation session here. Okay. But a lot of time it the recovery period will match the classification. So if it's a 5-year property, 5 will be the recovery period. We'll go deep into it later in later videos. So 70-year property will be 7. So let's go back here. So you'll put the recovery period, and they already fill it up for residential and non-residential real property already. And for the 25 years, let's go back here. Where were we? Okay, it was in the instructions. The instructions is page 9. You'll have that. And the publication, okay, the publication is on page 32. And then the convention, you'll have mid-month for residential and non-residential real property. So they already fill up that area. You don't have option for it. And you have, for the rest, you have mid-quarter, half year, and for those two, you have those two options, and we'll talk about each one of them. And the method under column F, you have 200% decline balance. That's the default. 200% decline balance under GDS. You have 150% declining balance under GDS, and you have straight line. For residential and non-residential properties, you only use straight line, so they already fill up that section. And when you are using 200, let's say if you are using 150% declining balance under GDS, which is General Depreciation System, GDS, you will put 150 space dB. If you are using straight line, you'll put straight line. Convention is either, I'm just putting example. So if that's half year, you'll put half year. If that's mid-quarter, MQ. And recovery period, I like to put GDS slash, you're on the row of 7. So I put 7 GDS slash 5. And yeah, you'll put your depreciations here. And then this is dollar amount. That's the basis for depreciation, and that's the depreciation deduction. So let's cover every session. So mid-quarter convention. If you place assets in business in 2020 for the first time, first is good. Whenever you place assets, you purchase something to use in your business that you know is going to last more than a year, you know is depreciable, that you record it. We do have a spreadsheet, depreciation spreadsheet. It's good you record your assets, the date you purchase your assets, how much it costs you, including the tax you paid, and the date you place it in service. At the end of the year, when you are working on your tax, your business tax, Then you'll ask yourself, by looking at the date you place the asset in service, you'll determine the quarters, the different quarters for those assets. So we can use an example here. So if, let's go up a little bit here. So if you place different assets in your business toward the year 2020, and you record when you place them in service, when you purchase them, when you place them in service, and how much they cost you, you could tell the quarters every date belongs to. So you'll do that. And if you place assets in your business the last quarter of the year, automatically you should ask yourself if you are required to use mid-quarter convention. If you didn't place any assets in service in quarter 4, by default you fall under a half-year convention. But if you place an asset within the last 3 months of the year, October, November, December, automatically you have 2 options, mid-quarter and half-year conventions. So now you will look at the cost of every single one of the items, assuming they are 100% used in your business. You'll take a look at their cost. You total everything. Okay, so and when we total everything is 318, you look at assets that you place in service the last 3 months of the year. You total those asset costs and you divide that by the total cost of the year the total cost of assets you place in business during that year. If the result is more than 40%, you have to use mid-quarter convention. But if assets you place in service for the rest of the quarter 1, 2, 3, accounted for more than what you place in service in the last 3 months, then you'll use a half-year quarter. So I don't know if that makes sense. So in this example, when $318 is the total of asset placed in service in 2020, and asset placed in service during the last quarter of the year is 189, is clearly well over 40%. So 189.73 divided by 318 is almost 60%. So 60% of the total cost of assets placed in service in 2020 belongs to the last quarter of the year. Automatically, that'll be a mid-quarter convention. That will be used. And when you are using that, so that means you pretty much, it's good to record every single quarter for the other assets. So we'll discuss more in detail how you will use mid-quarter convention. So mid-month convention. So you use mid-month convention for residential and non-residential rental properties. So column E, enter depreciation method for depreciation. So enter 200 DP for 200 declaring balance, 150 DP for 150% declining balance, and SL for straight line depreciation method. So column G, I think we talk about every single one. So enter the depreciation deduction, and there is a rate at the end of the IRS publication 946, which has the rates tables, and you will use the rate tables to find the rate you will use for each one of the assets we are going to depreciate. So if straight line rate is higher than the decline rate for the first year, use the straight line for the first year. Okay, so we'll have more videos, and there will be in a video playlist 2020 Form 45CC2 depreciation and amortization, and you'll be able to click on the video you wanted to watch based on the information you are looking for, and it will cover Form 45CC2, and we'll have how to depreciate a business asset, a blog category page as well, that will house all the articles that cover different sections of Form 45CC2. We do have links to Form 45CC2 and the publication 946 and instructions to Form 45CC2 on our blog under free download 2020 Federal Forms and Instructions. So now if you don't have to subscribe or enter email to access our free download session. Thank you so much for your time. Thank you all that subscribe to our channel, and thank you for all of your comments. I'm Afiavi Ojuna Lieberman, creators of Lieberman Consulting L.L.C. YouTube channel, Lieberman Consulting L.L.C. podcast, ninasoap.com, our blog, and we do have online store, digital download products at liberdownload.com, natural products at ninasoap.com, resell products at liberoutlets.com, and custom apparels products at liberlabel.com. Thank you so much for your time.